Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Despite slipping off the opening highs, the Sensex and the Nifty posted record closing highs, with the Sensex ending above 38,000 mark for the first time in history. The Nifty closed around 20 points higher. Banks outperformed yesterday, with the Nifty Bank adding more than around 250 points at close, and they were the stocks like ICICI Bank and Axis Bank that really contributed to the Bank Nifty gain. But the Midcap index, that one also ended around 0.5% higher. But as far as today goes, well, the global cues are a tad bit mixed. Asia has been trading lower. How do the cues look for today, Manglam?
Well, they look good, irrespective of what Asia is doing, to be very honest, Anisha, because you can't take away from the fact that the market has hit yet another record high. Over the last 5 sessions, the Nifty has notched a consecutive record close. Yesterday, we got important points coming in for both the Sensex and the Nifty Bank. Nifty Bank closed above the 28,000 mark. The Sensex conquered the 38,000 mark as well. And yesterday's gains were all of them were courtesy ICICI Bank. The Nifty ended higher by about 20 points. ICICI Bank's contribution was about 20 points. So we will keep an eye out on what takes place in today's trading session. However, what is interesting is the FII purchase in cash market. 4 days in a row, they've bought. In this week itself, they bought about 1,500 crores in the cash market. And the last time they bought for 4 days consecutively was way back in March 2018. So it's the first 4-day purchase by the FIIs in this fiscal itself. So that is a positive as against the sale that we were seeing from the FIIs. And this month, the rally seems more broad-based. Everyone has been making that point, and the mid-cap index has outperformed the Nifty and the Sensex by a factor of 2. So 1% gain this month for the Nifty. The mid-caps as well as the small caps have gained about 2%. Similar is the fate for the Nifty Bank itself. Add to that, we have positive cues coming in for India. Not just the FIIs are buying, not just that the rally is broad-based, but crude is falling. Crude is currently at a 7-week low, all set to notch a 6th consecutive weekly decline. And right now the Brent is below $72 per barrel. That does well for rupee. That also does well for financials. Now, some speed bumps. The only speed bump, the put call ratio is at 1.8. So that is something we have to watch out for. 11,500 is the mark where the maximum open interest on the call is. So perhaps could be a bit of a speed bump. And finally, there is this lot of trade war chatter, which may cause a few declines here and there. But fundamentally, no problem whatsoever.
Okay, so the cues look all right to start the trade, but what are the stocks that will be in focus? A lot of result reactions to deal with? A lot of
result reactions to deal with. So I will start with Eicher Motors. Absolutely inline set of numbers. The stock close to 52-week low. So let's see how that pans out in trade today. Aurobindo Pharma, that one will be another one I'll be watching out for. After Lupin, another pharmaceutical stock where we saw margin compression. So while the revenues grew about 15.5%, the EBITDA margins came in at 16.7%. Our poll was around 22%. JSPL, Nigel said the results would be spectacular, and spectacular they were. Steel business did better than heightened expectations as well. PNB Housing, Abhishek tells me assets under management grew by about 47%, but that grew at a cost because the net interest margin, that one came in lower at about 2.7, which compares with 3.1. Manappuram Finance, gold disbursements grew by about 12.7%. United Bank of India in the PSU pack, this is interesting because it's reported the lowest slippages in the last 6 quarters. That is a positive. Jet Airways. Now, that is one stock I will definitely be watching out for, primarily because the company has not only deferred its first quarter earnings, the stock is also out of F&O ban on a day where it is backed by some news. GNFC, stellar results, revenue growth of 64% and net profit growth of almost 180%. Can't say the same about Future Retail. The revenue came in much lower than our expected number. 5,000 was what we were expecting, 4,500 is what the company posted, and as a result of that, the EBITDA as well as the net profit came in lower as well. We'll definitely watch out for what Page Industries does as well. Yesterday was up 7% after a good set of numbers, but now brokerages are saying valuations are lofty. So will there be follow through or not is something we will watch out for. I left the big ones for the last. SBI, they have the results today, and it is an important swing factor for the Nifty Q1 FY19 earnings estimates. So that is something we will be watching out for. And finally, Sun Pharma. Overnight, we got numbers from Taro where the net profit came in higher.
The government must reduce control of public sector enterprises, and it should consider the concept of ownership neutrality. That's the key recommendation from the Parliamentary Panel on Industry. Now, the panel tabled its report in the Parliament yesterday and also suggested empowerment of independent directors and PSU boards. Rituparna Bhuyan filed this report with the key recommendations that the panel had.
important recommendations coming in from the Parliamentary Panel on Industry regarding corporate governance of central public sector units. The Parliamentary Panel maintains that the government should ponder over the concept of ownership neutrality as far as these government-owned companies are concerned, and government should make these central public sector units independent from the administrative ministries. Now, this was a recommendation which was also made by the Kotak Panel on Corporate Governance, and the Parliamentary Panel on Industry maintains that this recommendation of the Kotak Panel should be implemented. In addition to this, the Parliamentary Panel also acknowledged the government submission that the Ministry of Corporate Affairs is considering to bring down the number of government nominees in boards of central public sector enterprises. And not only that, there is also a proposal and an initiative which the government is considering to basically bring down the overall number of directors in a government-owned company. Last but not the least, this panel has recommended that there should be an aptitude test for recruitment of independent directors into CPSEs, and that one should look at the qualifications of these independent directors as well, and that at the moment 50% of the CPSEs which are listed, they do not adhere to the guidelines mentioned in the Companies Act regarding appointment of independent directors. So a whole host of recommendations being made by the Parliamentary Panel on Industry, and it remains to be seen how many of these recommendations get accepted by the government.
Okay, interesting recommendations made there, but shifting focus to government's dividend income now, Economic Affairs Secretary S.C. Garg has clarified that the government will receive 40,000 crore rupees as dividend from the Reserve Bank of India this year. Now, this after adjusting for the 10,000 crore rupees interim dividend which the government already accounted for in the last financial year. Sapna Das joins us to give us more clarity. Now, Sapna, tell us, what does this mean?
Well, the RBI accounts have just closed on June 30, 2018. So earlier to the 50,000 crore surplus that they've announced, there was another interim dividend of 10,000 crores which has already flowed into the government accounts in the financial year FY18. Obviously, RBI has given the total sum of surplus of 50,000 crores, but that would include the interim dividend that has already been taken by the government, simply because RBI follows the July to June calendar and the government follows the April to March calendar. So for RBI, it will be one big amount, that is 50,000 crores. The government at its end obviously has now indicated that they will adjust the earlier interim dividend of 10,000 crores, and so the net dividend for the government is going to be 40,000 crores so far. What happens next is basically that probably this entire system of dividend payments may happen in two tranches going forward as well, because a precedent has already been set. So government has indicated now that December, Jan, when they review the fiscal position, at that point in time, if there is a requirement, that they can still go ahead and ask another interim dividend from Reserve Bank of India. For RBI, the new calendar has already started. So basically, again, in the next financial year, that is 1920, from the government's perspective, in case they seek an interim dividend in the current financial year from Reserve Bank of India, again during 1920, that amount will get adjusted from whatever surplus RBI may announce next year sometime around the same time, around the month of August. So this is probably a new mechanism that has been worked out by RBI and Government of India till probably other issues are kind of settled. So net 40,000 crore is the number to go with as of now. In case government seeks an interim dividend later on during the financial year, that will go into the fiscal account of the current financial year, but from Reserve Bank of India's perspective, that will get adjusted again when they declare yet another surplus transfer next year sometime in August.
Thanks, Sapna, for clarifying that for us. But on to the big headline from the telecom space now. A day before his term was to end, TRAI chairman Ram Sevak Sharma has been given a 2-year extension. Now, the Appointments Committee of the Cabinet has approved his reappointment as the chairperson of TRAI till September 2020. R.S. Sharma, who was first appointed as the TRAI chief in July 2015, was recently in the eye of the storm after he disclosed his Aadhaar number on Twitter and threw an open challenge to people to show how the knowledge of the 12-digit unique ID could be used to access his personal data. He later claimed he had won the challenge. Okay, let's move on. The Serious Fraud Investigation Office, or SFIO, has arrested erstwhile promoter and managing director of Bhushan Steel, Neeraj Singhal, for allegedly contributing towards the company's insolvency, with allegation is that he had siphoned off over 2,000 crore rupees from loans availed by the company. Utkarsh Chaturvedi gives us more details on the charges against Singhal and an update on the current status.
This is the first arrest by SFIO after it was given the powers to arrest by the government. SFIO arrested Neeraj Singhal yesterday and was produced in the court. He will be in the custody of the Serious Fraud Investigation Office till the 14th of August. Now, he's been alleged to siphon off around 2,000 crore rupees worth of money, which was being given to the company as bank loans. What SFIO alleges is that he used around 80 companies, most of them being dummy companies and shell companies, to siphon off this money in the form of paying other bank loans as well as investments. Now, SFIO started investigating this case a few months back, and what associates tell us is that SFIO was close to filing a charge sheet in this case, but then what we believe is that SFIO found evidence enough to arrest Neeraj Singhal and investigate him in personal custody.
Okay, let's move on and talk about some important national news then. Kerala reels under massive floods after heavy rains lashed God's own country. Roads have crumbled like a pack of cards in Malappuram. So far, 26 people have died. The worst hit districts are Idukki, Malappuram, Wayanad and city of Kozhikode. Army and NDRF teams have been deployed for relief and rescue operations. The government has sounded red alert in Idukki district. Meanwhile, Karnataka CM H.D. Kumaraswamy has instructed the State Chief Secretary to send emergency relief materials to Kerala immediately.
Earning to watch out for today. Banking major State Bank of India will be in focus ahead of its first quarter numbers. The stock has gained about 20% from the start of this month. The asset quality will be keenly watched out for. Abhishek is here with the key expectations. Morning, Abhishek.
Good morning, Mangalam. So the key point to watch will be the slippages. Analysts on street are working with a slippage of anywhere between 16 to 20,000 crore. Below that, it will be positive. The asset quality movement will be seen closely. Now, remember that the gross NPA in the previous quarter was at 10.9%. So if the slippages are arrested at 15,000 crore less, and you see a recovery as we saw with other PSU banks in terms of NCLT resolution, anywhere between 10.8 to 11% kind of a gross NPA will be positive. Now, slippage from the watch list will be seen closely. About 25,800 crore is the number of watch list and SMA 1 and 2 accounts. So from there, how it comes will be seen closely. Provisions are expected to remain elevated due to aging of NPAs and mark-to-market treasury loss. Watch out for that. How much that hits will be seen very closely. Loan growth expected to remain muted at plus 2% quarter on quarter. The NIM expected to improve on account of healthy recovery seen, and they have a huge low-cost deposit share which will aid in cost of funds. So our polls suggest NII growth of 15% YOY, while net profit to decline by 78%. Now remember that we are expecting a net profit of 450 crore versus a loss of 7,700 crore in the previous quarter. Back to you.
Okay, Abhishek, thank you so much for that. But let's move on and talk about the auto pack now, because Eicher Motors reported a good set of numbers which were in line with estimates. Sonia is here with all the details. Sonia, good morning. Over to you.
Hi, good morning. Thanks for that. Yes, the numbers were actually quite good, but they were largely in line with estimates. So no surprises either way for Eicher Motors numbers. Now, if you look at it, the breakup, both Royal Enfield and the commercial vehicle business have done quite well. The operational performance has improved on a year-on-year basis. For Royal Enfield, the margins went up 80 basis points year-on-year, coming in at 31.8%, and the trajectory for Royal Enfield has been pretty strong. Now, the positive is that they've been able to maintain margins despite higher raw material costs without passing on the cost to consumers. So what they've managed to do is curtail their other expenses, which is a positive, and that's the reason why a couple of brokerages like Credit Suisse have upgraded the stock as well. If you look at the overall numbers, a revenue growth of about 30%, the EBITDA has gone up 30%, and the operating profit margin as well at 31.8%. Now, on the commercial vehicle business too, the numbers are looking pretty good. The margins have risen. The realizations per unit have also gone up about 3% year-on-year. In fact, Credit Suisse has gone ahead and upgraded the stock to a neutral. They say it was an uneventful quarter, but they've upgraded it because of the fall that the stock has seen over the last few months. everything now hinges on the new launches that they have and whether those will do well. For example, the Interceptor 650 that launches in a while from now. Let's listen into what the management had to say yesterday post numbers.
We have a new plant in the coming. So Vallam Vadigal, which has been our second modern plant at Royal Enfield in the Chennai area. The phase 2 of that is now underway, and construction has commenced, and production will be towards in the financial year 2019-20. The launch of our twin motorcycles. We unveiled them first time last year in EICMA, that's in Italy. Bookings will begin in a phased manner starting from the third quarter of this financial year and across the world.
All right, that was Siddharth Lal talking about Eicher Motors post numbers. But Sonia is still with us. Sonia, Bosch will be reporting its numbers. What is the street expecting?
Well, for Bosch, it's expected to be a decent quarter. The revenues are expected to go up by almost about 30% at 3,440 odd crores. Remember, it supplies to the commercial vehicle as well as the tractor space, and both those spaces have done very well this time. So that's the reason why the revenues will grow quite well. On the margin front too, we're expecting a 300 basis points bump up in margins. So 19% is what the street is looking at, and an EBITDA growth of almost about 49 odd percent. Raw material cost as a percentage of sales for them has fallen to 53.2% versus 54.4%. So that will aid the numbers this time. The stock, however, has been under quite a bit of pressure. There is a transition that will eventually take place to BS6, and at that point in time, Bosch will benefit quite a bit. But they have to make those investments in order to, help with the transition, and that investments could put a bit of pressure on their balance sheet, etc. Perhaps that's the reason why the stock is down about 20 odd percent in the last 12 months. But this quarter's numbers are expected to be decent.
Okay, so decent numbers expected from Bosch, but what about Jet Airways, Sonia? Because that one has set up a new executive committee to improve public perception. Even as Chairman Naresh Goyal says he feels guilty and embarrassed that investors are losing money. The company, of course, also deferred the Q1 results that were due yesterday. Sonia, what are the details and what do you think the stock reaction will be?
Well, the stock will definitely be under pressure today. It's a rare development, and it's a very surprising twist to the financial troubles that Jet Airways is seeing. For the first time, they've actually gone ahead and deferred their results. Remember, for the past many quarters, the auditors have raised concerns with respect to meeting the financial obligations of the company. We've been stating that the debt of the company has also gone up substantially over the last few quarters. They've been sitting on a huge loss at the end of FY18. In fact, even this quarter, the losses were expected to pile up. Kotak had estimated the losses for Jet Airways to be in excess of 800 crores for this particular quarter. But let's see how that shapes up. For now, as you said, Naresh Goyal did make those statements yesterday with regards to how shareholders have lost a lot of money and that he feels guilty and embarrassed. But more importantly, he did say that all perceptions about the company will be corrected through a new executive committee. Naseem Zaidi and Ashok Chawla will be chairing meetings of the new executive committee. However, we need to see how the auditors will move on this particular news flow. The fact that the company has gone ahead and deferred their results, they've also said, the statement that Jet disclosed said that the audit committee has refused to approve the financial results pending closure of certain matters. Now, no more details were given, but we need to know what these certain matters were. Expect the stock to be under pressure today.
Absolutely, Sonia. And importantly, yesterday the stock also came out of F&O ban with news backing it. Will be very interesting to see how the street reacts to Jet.